The star performer last week was GBP versus USD, as the prospect of a delay to Brexit helped give the pound a boost above the recent 133 resistance level and a gain from February lows of almost 5%. This had a knock-on effect onto the UK's signature equity index that is made up of predominantly dollar-earning companies, causing a decline in the UK 100. US markets maintained their positive momentum as Fed Chair Jerome Powell testified in front of Congress, stating that the Federal Reserve was in no rush to make a judgment regarding further changes to interest rates or current monetary policy. This, coupled with optimism surrounding the trade talks between the US and China, boosted equities to within 5% of all-time highs. It goes without saying that updates between the world's largest two economies will continue to fuel volatility next week, as will ongoing Brexit negotiations. USD CAD has continued its downtrend through February and is retesting 2019 lows as a result of strengthening dollar. Often considered precursor for non-farm payroll figures on Wednesday, we get ADP employment change data from the US at 12:15. This in itself can provide volatility. However, this pairing could be in for a particularly active afternoon when the Bank of Canada released their latest interest rate decision, accompanied by a statement at 3 p.m. Will we finally see a reason for the Canadian dollar to pick up against the mighty greenback? We shall wait and see. Thursday sees euro-dollar in focus. We'll see GDP figures from the Eurozone during the morning, followed by the latest interest rate decision and statement released from the European Central Bank in the early afternoon. The lack of expectations from the ECB to amend its current monetary policy has kept the euro pinned down near 18-month lows against the greenback. Initial and continuing jobless claims data from the US is sandwiched between the two important announcements from Europe. The main focal point of the week comes on the final trading day. GBP USD, or cable as it's more commonly referred to, has seen dramatic swings in 2019. UK CPI hit the wires at 9:30, but all eyes will be on the non-farm payroll figures from the US in the afternoon. Although the Fed has stated that it is in no rush to continue on the 2018 path of interest rate hikes, could their hand be forced by the strength of NFE figures seen in recent months. Historically speaking, the monthly jobs data from the world's largest economy can be amongst the most volatile data released. Last week, the price of Brent crude refused to succumb to the political pressure of Donald Trump as he took to Twitter to tell OPEC members to take it easy with regards to output cuts. Crude quickly recovered due to an almost immediate response from OPEC nations stating they remain committed to their targets. The gains were also assisted by a larger than expected drawdown in oil inventories. Updates from Trump at OPEC could fuel further volatility next week. API weekly crude oil stock data on Tuesday evening and EIA crude oil stocks change on Wednesday afternoon will also be needed to watch when trading oil in the coming week. For more information on company results and our economic calendar, please see our week ahead. Thank you.